The definition of whether you are adding operational value really comes down to whether you can change management. Because in order to improve management in China, quite often that does mean having to change certain key people. So different companies have different challenges, but in the types of companies we target, most of them are companies that are older, more established, that were historically run by first-generation entrepreneurs. And what we do is we try to go in and work with those entrepreneurs in order to effect a transition toward a more sustainable, longer-term, professionalized management structure. And in order to do that, we feel we need control. I think there's no doubt that the willingness and the number of entrepreneurs with whom you can have this discussion is growing dramatically. There are many factors. The first one simply is age. The typical entrepreneur in China is between 55 and 75 years old. And most of them, because of the one-child policy and other factors, have limited family members and therefore have a succession challenge that they will have to address. There are also many other factors that we think are contributing to the willingness of entrepreneurs to have this discussion. One that we've noticed very strongly lately is a really renewed focus on lifestyle and on just quality of life issues. You see that in the reported statistics about immigration from China. What we would say that we've observed with the entrepreneurs we've worked with is that many of them really have just worked extremely hard for 60 or 65 years of their lives. And they're looking for a way to both put their business in good hands and under good control, and to continue to enjoy some legacy involvement, maybe by being a minority investor, but having the flexibility to go off and maybe finally start to enjoy life. I think the key is that we don't approach the founder as a private equity firm. We approach them as someone who knows how to run their business. Now, we can do that because the types of companies we're acquiring tend to be in quite similar sectors. So if we own a babywear business, we can have our babywear operating professionals approach kidswear businesses, or even maybe womenswear businesses, or even sportswear businesses, because actually these businesses are all run in a very similar fashion. They have very similar partners, and they have very similar business models. What we have found is that the employees in the types of companies we buy have a real deep loyalty to the company, and to some extent as well a deep loyalty to the founder. But many of the employees themselves really yearn to work for a bigger, more established, more professionally run business. They know that their company is middle market. They know that it's maybe more of a typical Chinese founder-led type of business. Many of them aspire to work for a company that might be more run a little bit like a domestic Chinese leader or a multinational. And I think what we have found is that once we've taken over the business and begun that process of transitioning and professionalizing, that the employee satisfaction has actually risen quite dramatically. And I would say it's very rare that we end up with situations where we feel that employees somehow are left conflicted between the past and the future. Our oldest investment now is the babywear business, which is only 4 years. We've had multiple offers to buy it. It has a lot of capital markets activity, but I think more importantly, we've distributed a lot of money back on that investment already, because the company's profitable, we own control, we have the ability to recapitalize it. So by having control, we don't feel under pressure to exit, because we've actually been steadily returning distributions on that investment and almost all of our investments in our portfolio consistently over a long period of time. Now, that having been said, the number one challenge for Chinese private equity is cash-on-cash returns. I think it's an open secret that there's tremendous disappointment overall with Chinese private equity when it comes to distributions. I think the way we address that risk and address that challenge is through having control. Our businesses have many more routes to exit. We have many companies in our portfolio that are entertaining both multiple routes to IPO and multiple acquisition offers. And within the acquisition offers, those range from acquisition offers from trade sale or strategic type acquirers, all the way down to acquisition offers from other private equity firms.